Thanks so much for being here, Amy. I'm really excited to pick your brain a little bit about everything from, founding companies, fundraising, finance, digital assets, the whole gamut. And you're such an expert in so many of these things, so I'm really thankful for this conversation already.
Well, I'm excited to be here. Thanks so much for having me.
Awesome. If you're up for it, I can start digging into some of the topics that we have here, and start learning a little bit more about your experience or from your experiences. So the first question I had was, you built and sold an enterprise SaaS company before, with Sonata being acquired by Cisco, and now with Bitwave, you're tackling one of the more complex challenges in finance, digital asset accounting. It's completely uncharted territory, and I know Bitwave was bootstrapped for the first few years until the market itself was ready. I'm so curious to hear about that decision.
Yeah. Well, it was interesting. We looked around at the time we started the company, which was 2018. And at that point, there was already a lot of retail and individual interest in digital assets. And my co-founder and I felt really, really strongly that if there were individuals trading crypto and so passionate about digital assets, that businesses would follow. There would need to be a whole industry of infrastructure to support them, and businesses go where consumers are. That's how they make money. And so we knew that it would be coming eventually, but since our market was always meant to be B2B, we were enterprise from day one. We knew we had to kind of wait a little bit because in 2018, the TAM was not big enough, we felt, to justify the VC backing, because when you take investment and outside capital, there is the expectation to grow and address what should be a fairly large TAM, total addressable market. And so we just didn't think that it was there yet, but we knew that it would be there in the future. We felt strongly, we had enough conviction that it would be there in the future. And so we just ran like a very lean startup model, got an MVP out pretty quickly, got our first initial customers by attending a conference and setting up a booth. We did that a couple times and had probably our first dozen or so customers within the first couple of months. And then just spent the first 3 years, 2.5 years, really just focused on product, because what we do is very engineering intensive. There's a lot of intricacy to integrating with various different blockchains. The different blockchains vary a lot, and moving like financial, auditable, high quality data between systems is actually pretty complex to make sure that it's reliable, always up to date. And so there was a heavy engineering lift, but we had a handful of really great early customers that gave us a lot of really insightful information. And we were able to just kind of run it for several years. And then we looked around like 2021 timeframe. At that point, the whole digital asset kind of ecosystem had matured enough that people were starting businesses to service all the various different things that were going on in digital assets, whether it was NFT trading, DeFi, staking, all of these things at that point existed, and startups and larger scale enterprises existed to support it. So we had a market to sell to.
I find it like extra remarkable that you had the sort of strength to like go in with your conviction, because you're like taking the most precious thing you have, which is your time, and investing in this thing where like the market signal was not quite there, and you had conviction it would be there, but I'm sure lots of people told you what are you doing? Like, this is not going to work. And it takes an incredible amount of I don't know, like guts to like stick with that type of thing. And I don't know how to like. How did you manage the self-doubt around it? I assume you had some, or maybe you didn't.
I mean, Pat and I, my co-founder, we had really strong conviction that there would be enterprises would touch digital assets. Once, I actually learned about crypto and digital assets from him. Even when we were doing our previous startup, Sonata, we ran that from 2013 to 2016. And even like in 2013, he was talking about Bitcoin, talking about digital assets. He was like mining Bitcoin under our desk at the co-working space that we worked out of for Sonata. And so like I had already had a long time to build up my belief in digital assets and the future for the whole blockchain kind of ecosystem. And so I was very like, I was all in on that. Eventually all enterprises would touch blockchain in some way. And we're seeing that now with the rise of stablecoins, because stablecoins is just such a killer use case for enterprises to use digital assets for B2B settlements, for paying invoices. It's the whole new world of programmable money, and enterprises are embracing it. And so we really are, just even like every day, I see more and more of how enterprises and businesses are starting to embrace and use digital assets. So yeah, I felt it strongly then. I feel it strongly now.
Wow, that's amazing. And so I guess a lot of that faith is was and then is being rewarded. And in 2022, you raised a Series A, so the market sentiment clearly had changed a bit around it. And Subscript raised, we raised our Series A last year, and it's like so different from the first time I raised the Series A. Yes. So I'm curious what your experience has been like. For me, it was like between 2015 and 2024 was like a world apart.
Right.
And I'm sure, I'm curious, like, what was that difference like for you?
Yeah. I mean, it's different every time. And as a second time founder, obviously everything is a little bit easier because you have a network that you can rely on. You know, we initially, though, called up all the same kind of investors that we had worked with and people we knew, because our previous product was an enterprise software SaaS tool as well. And so we initially reached out to enterprise investors and SaaS investors who really had not developed the same conviction, I will say, that Pat and I had around digital assets. And so ultimately we ended up raising from blockchain focused VCs. So it was a pretty different experience because we were being compared side by side with like token deals, with people who were going to be issuing their own coin, creating their own blockchain, and the function of those raises are very different. So we're raising from blockchain investors, but we're not a token offering. We're a SaaS enterprise offering. So it was a very different, we're here with our SaaS metrics. And then, you know, initially some of the blockchain investors were like, well, what are the tokenomics? And we're like, well, we're actually not going to issue a token. We're going to just be a SaaS software. But we did find a great, just a fantastic group of investors who also saw the need for infrastructure to really, they were bought in on the whole concept of digital assets and the whole world that is being created by blockchain. And so they were on board with the need for infrastructure, and especially things that will serve businesses, because they could see the need for what we did within their own portfolio companies who were starting to launch and have a lot of token-based transactions that they needed to account for, needed to keep track of, needed to calculate taxes, all of the above.
That's cool. And I feel like that moment after you raise sort of like a Series A size round, and then you have to figure out, okay, like, how do I use this to grow the business? It's actually kind of surprisingly hard. You know, everyone's like, congrats. And you're like, what do I do? Or at least I felt that the first time, and a little bit even the second time. And I'm curious, like, how's your approach to actually, like, you know, using the investment in the business to you know, generate growth, generate success? Like, what does that look like, and how's it differed?
The moment right after you raise the Series A is really, you can't do it yourself. You can't grow. You can't hit the metrics that you want to hear, which is the smaller team that you had when you were bootstrapped or Series A. So it's really the time when you have the dry powder and the opportunity to build the team that you want to build and fill in the gaps, because earlier in your kind of startup journey, everyone is like juggling so many things. Everyone at the company wears a lot of hats when you're a bootstrapped or a series like seed company. But by the time you're Series A, you have the opportunity to invest in the team members that have those more specialized skills. And so you can have someone just dedicated to just finance or just marketing, whereas before everybody's doing a little bit of everything. And I'm super proud of the team that we built here at Bitwave. This kind of point where we were from Series A till now, we did the most growing as the team. And yeah, it's fantastic to see.
That's really cool. I feel like CFOs have a bit of this paradox where they're naturally risk averse, but then they also need to enable the innovation that drives the business forward. And I feel like you kind of live at the intersection of those because like digital assets by definition are kind of the edge of the innovation. And so I'm curious, like, what is the biggest misconception you hear from finance leaders about digital assets?
Well, honestly, it's that like that digital assets are only used for crime. I'm like shocked when I still hear that from people. And I'm going to repeat something I heard at the crypto banking compliance conference I was at last year. And it's like, if you think digital assets are used for crime, let me tell you about this thing called cash. Like the scale of fraud that is committed using digital assets versus cash in traditional financial systems. I mean, it's just not even comparable. And so when people group all digital assets and everybody in the industry together and don't see that there are a lot of very legitimate businesses and business reasons to use digital assets. I still find that surprising. And I do find that more kind of with traditional finance folks sometimes that they're still scared. But I'm like, do you have a real opinion on what kind of database your bank uses? Like, do you have like this is a technology, blockchain is a technology. I'm not sure why this is, but like why people have such knee-jerk reaction, and especially around stablecoin, something that you just have to think of it as digital enabled money, programmable money. It's the same as looking at a bank balance. There's a system behind that, the system of record, a ledger that is keeping track of all those transactions. And with blockchain, it's just a distributed ledger. It's a one that is, blockchain based versus a house database. It's why banks end up charging fees and act as the middleman is they have all this kind of old school infrastructure and software behind it. And if we can achieve those same goals by using blockchain or a newer technology, I'm not sure why it would be such a negative reaction, but I still do get a negative reaction sometimes. And I find that most surprising.
Yeah, that's so interesting. And so I guess like sometimes people have this knee-jerk reaction. What gets them to become more open-minded?
I think my favorite use case is actually something that I don't do. We don't do at all, which is like remittances across borders kind of consumer. So peer-to-peer payments. I think it is crazy the amount that is taken out when people send money from the US to other parts of the world. It's up to 35% sometimes. And you think these are people who are oftentimes like coming to the US and working and then helping support family members and friends back home. And just to simply send money between people, so high fees. Like some of the
That is criminal.
It's criminal. I think it is.
Yeah.
I do. Yeah. I really think it's criminal that like to send money to lots of places in Latin America and India can be 30% off the top. Your own money to your own family members, to sometimes your own spouse. And blockchain is the perfect use case for that. You can put it in a stable coin, so there's no fluctuation. Oftentimes the on-ramp and off-ramp is a lot less than something like a Western Union or an international wire. And you can securely move money across borders. And we're lucky in the US to have a very stable currency. People talk about inflation all the time here, but we have no idea what real inflation is in the US, where we have such a stable currency. But other parts of the world, that's just not the case. And so having a financial tool that is divorced from governments and politics, I think that there is something good in that. I think that it allows something like a stable coin that is not tied to any individual government, or even something like a Bitcoin or ETH that's pretty widely traded, to be a good alternative for people who are not as lucky as we are here in the US.
That's a great point. For CFOs, or if a CFO is hesitant about crypto or digital assets, and in relation to like a business opportunity, like something that will really move things forward for them or their business, what's like the first step you would say they should take to become more informed?
Yeah, honestly, is if you have a little extra money, like just just get started with $20. Just understand what an exchange is, how a custodial wallet is, what wallet addresses are. It's something that anyone can get into, and it's something you can get into with very little money and just get a little bit of hands-on experience. And I think that's really the best way. And then when you see that a stable coin like USDC that you get through Coinbase, it functions basically like a bank account. And you're not actually, as a CFO, like taking stacks of cash and sending it off to someone. People still write a lot of checks, which I think is crazy. But it's basically the same as moving money digitally, as CFOs are already very used to doing. At Bitwave, we have an ARAP, like payments management tool, that brings all the same type of invoice and vendor management and approval, penny test, all the same functionality controls that you would expect, in a B2B software that you're used to in like a bill.com or any other tool where you're verifying vendors and collecting their addresses. That's available for digital assets as well. You can have the same set of controls and policies around moving digital assets that you have around paying in fiat.
That's cool. When it comes to digital assets, because it's so new, there's like a lot of variability. There's like stable coins that maybe were not so stable or things like that. How do you like, I think a lot of the wariness seems to come from that. Mm-hmm. How do you suggest people approach that and
I think about it as risk. I mean, I think that you have to have a treasury plan and treasury policies and just think about it as risk. Like, that variability comes with potential upside. So if people are thinking about it as the risk part of their entire risk profile, I think that is appropriate. Like, maybe you don't want any risk and your treasury team does not want to try to get any yield. That's totally fine, but maybe they do. And so it's a different tool in your tool chest.
Yep. Makes total sense. So when like more traditional finance teams, or not companies that are not entirely digital asset oriented, do things with digital assets, they can have quite a lot of operational challenges because they're not really set up for some of these things. What are like some of the fundamental gaps you see that give rise to those challenges?
It's a concept here at Bitwave that we call wallet hygiene. So digital asset wallets at businesses tend to proliferate. They're very easy to set up. And if you think about the difficulty of setting up a business bank account, like a corporate bank account, often that's like needs to be approved by your board, but it certainly is not something that like anyone can just do. And so if you are thinking about something like a custodial account, or like a checking account or a business savings, but it's that anyone at your company could spin up. And so we have we call it wallet hygiene. You should have good processes in place in maintaining both control and just access control and knowing the current balances. We've had customers who have found like years later digital asset wallets that like an employee had made, done some transactions, and then ended up having a significant amount of money in them. And they just like forgot about it and then found it once they went through the whole process of like really onboarding and doing a control check around where these wallets are, because any developer, or really anyone at your company, could spin up a wallet. There's not that same level of initial control. And so having a good process in place on just maintaining and checking and controlling and tracking your various different wallets is really, really important, because once you get used to using digital assets, it's actually very easy, and your team will love it.
Yeah. That's so interesting. And I guess like I would have assumed that for any wallet created, you'd kind of have track of the cash flow from your thing you are tracking to the thing you're not tracking. Where does that get lost?
I think it's often, I don't want to point to developers, but oftentimes people will you've spin up a wallet for testing. It starts as like a petty cash wallet, but then they're buying and trading and selling, money's moving in and out. Then maybe like that person leaves the company or something like that. I don't know. You have a lot of like something that Bitwave really solves is you end up having a lot of oftentimes one-sided transactions. Like you not sure where what these wallets are that you're moving because it's just a list of addresses unless you're keeping track of it, unless you've like have a schema internally to say, okay, well, this wallet is developer A and this wallet is developer B, and you've labeled those
Yeah.
clearly and you have
Yeah.
marked like this is only for development purposes. Oftentimes people will end up, they'll start with like one omnibus wallet and they'll realize that keeping track of all these different transactions is too difficult. So then they'll make 10 different wallets. But if you're not really careful about tracking them, they are actually easy to get lost because it is like I keep saying it is like a bank account or something like that, but there's not like remittance advice unless you use a software like Bitwave. Like there's not a lot of information that you're getting on who owns this wallet unless you're making a conscious effort to document it.
Yeah. I guess it's interesting because the thing that really stands out for me is that at its core, all these are, just the digital assets are a technology, and it's very much a kind of a raw technology. It's not like meant to be everything that a bank account is right out of the box. And you kind of need a core part of that infrastructure, like Bitwave, to make it work have the technology sort of work in the way that you need it to work for actual
and integrate with your existing software. I think something we felt strongly at Bitwave is digital assets are not going to replace everything. Like businesses are not going to be 100% on digital assets. They're always going to have fiat. And for businesses to actually be using digital assets, they need to have it tied into their existing systems, to their ERPs, to where they're doing their fiat accounting. And so really that integration point is actually super, super important.
And what is the sort of, where do those other softwares that are part of the finance tech stack kind of, fall short in terms of being able to support support digital assets?
Often it's the number of decimal places. If you think about traditional finance softwares, most go down to 2 or 4 decimal points.
Right.
But digital assets, you need 16, 32. And so like the UIs will just literally break. For things like Bitcoin or Ethereum that fluctuate in value, the accounting treatments can be quite complex and not the same as a fiat currency, because traditional accounting, you have like Forex, or you have like an inventory item, and crypto accounting kind of combines the concepts of both of those. It's like an inventory item that you have to track, but that is fluctuating in value. And so it is a bit of its own thing. It doesn't function like either inventory items or Forex in your traditional fiat ERP solutions. And so that's why Bitwave exists as like a subledger. The best way to do that kind of digital asset accounting is to keep it separate from your fiat accounting and track it in a subledger, because it kind of functions differently than Forex currency or than, inventory lots. And then,
Oh, so interesting. So before companies adopt Bitwave, or if they don't adopt Bitwave, what do they do?
Spreadsheets, massive spreadsheets that are manually updated. And like a very manual process. In fact, that's early days when we initially went to go out and raise, like people would ask like, well, like, who is your competition? And I'm like, hiring like 5 people to keep a beast of a spreadsheet accurate and up to date. And it's not a spreadsheet that is being manually updated, is not very auditable. It's not the best way to run a high functioning finance org. I mean, I love spreadsheets. Who doesn't love spreadsheets? They serve their purpose, but to really be an accounting system of record, it's not ideal.
We're in the same world as you. Everyone uses spreadsheets to manage everything about their financial revenue operations and billing their customers and doing revenue recognition and the complex formulas, and try implementing a locking mechanism for the month of March in a spreadsheet, but leave April able to be changed. And it's like, good luck. So I'm very familiar with that. As a spreadsheet person myself, love spreadsheets for modeling, really bad for store of data.
Right. Yes. Agreed.
Very cool. How does like a multi-ledger environment typically then end up, or sorry, not a multi-ledger, I guess multi-ledger as well as like, the combination of fiat and digital assets. Like, how does that live
Yeah.
alongside a traditional ERP in a business? Like, can you paint a picture for that?
Yeah. Usually people are doing like rolled up journal entry reports to reflect their digital asset holdings in whatever currency they're denominated, so US dollars. And so that's why keeping an accurate sub ledger and just doing all your crypto accounting and transaction monitoring and even tax calculations in a system that is built for digital assets. And then you can just push the dollar equivalent and keep your, main financial statements all still dollar denominated.
Got it. Got it. Okay. That makes sense. Um, that's cool. And what is usually sort of like that first use case that might cause someone to like enter go from a pure fiat world into a fiat plus
Yeah.
digital asset world?
Well, honestly, it's like varied through the time we've been at
Yeah.
Bitwave. During the like summer of DeFi, it was everybody getting into DeFi and realizing the yields and opportunities there. That's very complex accounting. When NFTs were a big thing, it was, brands wanting to engage with their customers through an NFT. But of course, you mint, create, buy, sell NFTs with digital assets. So suddenly you had these large corporations who had issued NFTs and had Ethereum denominated revenue that they needed to account for. And then now, like I mentioned before, I actually think stablecoin payments is an excellent use case for enterprises to get into digital assets. You think about all that can be done with smart contracts and the more programmable invoices. Like imagine a supply chain where you would be able to program in and release a stablecoin payment, when your shipment is actually received at a warehouse or sent from a warehouse, and kind of pre-programming things in that can be executed via a smart contract and paid out in stablecoins. I mean, I think that there's a lot of exciting opportunities for businesses to do that. But even if you just are playing, like I said, vendors abroad or contractors overseas, you could use stablecoins for quick, easy, fast remittances.
That's really cool. And so do you see like particular types of organizations or particular industries doing this a little bit more often than others, or is it more across the board?
Yeah, there's really kind of a bit of a network. As soon as someone wants to pay you in stable coins, whatever kind of vendor, like we've seen traditional enterprises, we've seen kind of more crypto native, we've seen smaller startups. Really, it's pretty universal. Like saving money, time on payments is a pretty universal appeal.
Yeah,
So
very
really
interesting.
anyone.
Yeah. Okay. So like a whole diversity of use cases and a whole diversity of organizations is kind of like sprouting up a little bit
Yeah.
everywhere. That's cool. Um, what's the biggest financial blind spot for companies engaging with digital assets today?
Oh gosh, I guess not spending time in process. And like I think the biggest blind spot is not exactly having a good control process in place and really understanding some of the more downstream uh, things. Like it is going to cause an accounting um, not issue, but an accounting challenge that needs to be addressed, but not that that's bad. It could cause tax, depending on what kind of digital assets and how you're holding your wallets. Having a good strategy of like people and process and tools in place, and doing that early rather than later. Sometimes we'll see folks engage in digital assets and get pretty far down the road before they realize that they don't have any of those people process tools in place, and then the cleanup can be harder than if you just kind of had things set up from day one.
Interesting. And I guess like what are the what are the consequences of being late on some of this stuff, or not necessarily keeping track of it from an early stage?
Well, yeah, cleaning up one of those messy spreadsheets, and that's not a fun project for anyone. I mean, I think you're just missing the opportunity for innovation, for streamlining things, for keeping, headcount low. If you like are hiring people to help manage things more manually, that's not maybe the best user resource.
Yeah, totally. Um, you talked about how Bitwave is less of a token issuer type of business with that type of metrics, but more
Yeah.
B2B SaaS business, right? And so you are focused on B2B SaaS types of metrics, and you have a pretty metrics driven approach. And full disclosure, you're a Subscript customer. So I'd love to hear more of your perspective on this. Like, what are the SaaS metrics you focus on? And I would also love to hear how that's evolved from your past company.
Yeah. We at Bitwave, we've always been built for enterprises from day one. But, like I said, there weren't a ton of enterprises in the space when we got started. And so we really did work with SMBs, mid-market, crypto native, non-crypto native, a whole kind of broad set of users. And so having a tool that can really look at revenue by customer type was super, super important for us. So we knew where to focus, when to focus more on the needs of our enterprise clients. Everything's always been built from day one to be like enterprise grade from a security and compliance perspective. But there are certain features that enterprises tend to need more than some of our more mid-market companies. And so really like looking at things like ARR, but then going one step deeper and looking at things like ARR by customer type. It's a metric that I really focus on and keep track of, because I think it helps make data informed decisions on where you spend engineering time.
That makes so much sense, being able to like segment by those cohorts. I'm also curious, like, how do you manage that from a product direction perspective, the different types of customers? Because I imagine they're pulling you in different directions.
At times, but sometimes the needs of, more mid-market companies really do align with enterprises. And so, just try to follow, the revenue. And so, as a business, you have to be growing. And so figuring out where you think the biggest opportunity for growth is and focusing on that segment.
Yeah, that makes sense.
And our last company, it really was, we only had one ICP, one kind of customer type. So this was something that at first kind of we think of Bitwave as a platform, really. So we've always thought of it as a platform with a lot of different modules, different upsell opportunities, different things. So it is kind of a bit of a choose your own adventure when you implement Bitwave, because the platform at this point has been around for 6+ going on 7 years. So you really can, it can do a lot. You can do a lot in Bitwave. And so thinking of as a modularized platform helps us kind of build a package and implement Bitwave that's exactly right for each of our different kind of customers, whether it's a crypto exchange versus, a more traditional enterprise who's just using it for payments. Like you can handle everything you need to do in Bitwave, but those are two different kind of user types. Even though maybe they're both large enterprises, the way they use Bitwave could be different. And so kind of that platform approach was something different for us this time with Bitwave versus our last product.
That's really cool. And it's interesting because like products like that are so powerful, but they take time to build. But if you know kind of what the customers want, it's worth it to take that time and build the right thing that'll just work for them, right?
Right, exactly.
That's cool. Before using Subscript, what were your sort of challenges around billing and revenue and metrics?
Well, it was keeping QuickBooks and HubSpot aligned. And then we have our commission software too. And so it was a lot of different systems, how people were paying us. I think we're pretty unique in that we accept customer payments in crypto and digital assets. I mean, like I said, now that's exploding, but we have been doing that from day one. You could always pay us in digital assets. And some of our actually earliest customers are the large blockchain foundations that everyone kind of knows, because they had very complex accounting needs. And they wanted, of course, they're a foundation issuing a token. They wanted to pay in their digital assets. So a huge chunk of our customers pay in their own native tokens. And so keeping our multiple systems up to date and what we're pulling out of Bitwave, it's a challenge. It's a challenge that our own customers have and that we solve for them. So just really having a system that is meant for SaaS billing, that is flexible enough to be able to bill things out. We have some usage-based costs. That was a big struggle before using Subscript, usage-based billing. So yeah, just I think
That's
all the
cool.
typical challenges of multiple systems, multiple different, like I mentioned, we have multiple different customer types, different modules. Everyone has kind of a custom implementation. And so it was a lot to try to do without a tool like Subscript.
Huh. In what ways does Subscript help you operate more effectively then?
We were sending invoices out from multiple places. And so having just a centralized place to both send invoices out, but then also to do kind of SaaS metric reporting and better kind of SaaS accounting, because we are great at digital asset accounting, but Bitwave does not do any sort of fiat accounting. And so having a tool that was really designed for subscription revenue has been great.
That's very cool. I'd love to, before we end, poke a little bit into how you think about the future of digital assets. Bitwave is at the forefront. A lot of, really anything related to enterprise crypto accounting. And you partnered with AngelList recently to bring digital asset management solutions to fund managers, and highlighting especially how venture capital is shifting. So I'd love to kind of pick your brain on what do you see in the futures. One question, as VCs and enterprises, they continue to embrace digital assets.
They do.
What do you think is next?
I mean, yes, certainly at the moment, VCs, investors, there's a lot of excitement and commitment to digital assets. Blockchain I think it's a great technology. It is a technology. People think of it as this kind of abstract thing, but at the end of the day, blockchain is a technology. It's a technology tool that's cryptocurrency and digital assets and currency in general and transfer of value is a great use case for blockchain technology. But that's not the only use case. It's now those two things are very conflated, but blockchain as the underlying technology and then digital assets as the kind of use case of them, I don't think is going away, especially because of AI and digital assets. I think the whole next wave that we're going to see is agents using digital assets and stablecoins. I don't think an AI is going to go to an ATM and take a stack of cash out and go pay for something. I think that AI agents will be interacting with digital assets because it is programmable money. They'll need to interact with programmable money. And right now, digital assets is the best. A blockchain-based cryptocurrency is the best for a programmable asset. So I think it's only going to grow.
Very cool.
All the future, I think we'll see a lot of really cool things. People will continue to innovate, and continue to find new use cases for things.
You mentioned that over time, the use cases that are trending have differed.
Yeah.
What do you see trending now, and which use cases are really gaining traction for traditional organizations embracing digital assets, and where do you think that may shift over the next year or few years?
I think it's payments. I think payments from the beginning have been the best use case. It was even mentioned in Satoshi's white paper as a peer-to-peer kind of payment option. And so the value transfer, it's just the best use case for digital assets. It's the longest lasting. I think the widespread use of stablecoins. So the rise of stablecoins, which have been around for a while. Everyone's talking about stablecoins as if they're a brand new thing. Stablecoins have been around for a while, but they're really just at this point, I think everyone understands how they're different than something like Bitcoin or Ethereum, or any of the meme coins that sprout up. So I think the widespread understanding that this is just a peg to the dollar, what it is, how it functions. I think that's why stablecoins are having their moment. And I think that that's the biggest use case, but it's kind of always been the use case.
Yeah. Hmm. And as we think about like more and more digital money and the intersection with AI agents, and what are like sort of the um, traits or attitudes that will separate finance leaders who do really well with that type of change and embracing the possibilities?
Yeah. I mean, I think it's that keeping the change in mind. So embracing that things do evolve in the digital asset space, oftentimes very quickly. And so if you're the kind of person who maybe like a bit of a whiplash between different things is maybe not your favorite thing, I would say go in heads up, knowing that things in the digital asset space do evolve at a very rapid pace. But that's one of the things I like about it. I think that that's what keeps Bitwave and the product that we're building exciting. Like, I like that every month it feels like there's a new chain or a new product or a new use case. It's exciting. Obviously, it's a management challenge to keep a really solid backlog and keep a good roadmap in mind and not get pulled in a bunch of different directions. But I actually find that really interesting and exciting. A part of why I do love working in this industry is people are so creative. There's always something new. Yeah. I find it really exciting.
That's really cool. I think we've covered almost everything. I'm curious if you have anything to add as far as closing on either the present or the future of digital assets and enterprises embracing them.
Yeah. I mean, I think, anything can really be tokenized on chain. Like, you can have RWAs and real world assets. People talk about that a lot. I think that's a really exciting thing. If you have assets or something that you want to tokenize, like, businesses can do that. That used to be pretty near impossible. Easy, quick cross-border payments. That used to be a lot of friction, mailing checks, like all of that can go away if you start using stablecoins, and you can still bring all the same controls and process that you have in place around ensuring good financial practices within your organization. You can keep those same processes and controls even when you move into digital assets. At this point, the digital asset accounting industry, like the CPAs and firms and outsourced bookkeepers who might be helping you with your fiat accounting, now there's a whole ecosystem, a world of experts and folks who you can engage with if maybe you don't have the capacity in-house to keep track of everything. And then again, like investing in something like Bitwave to have a good system and a process and controls in place and keeping track of things, up to industry best practices from day one will save you a lot of cleanup work on the back end. And then, just get started. It's not scary. It's not hard. Just play around with a few things with a couple dollars. I think if you're worried about it, that you shouldn't be. I think you'll see once you actually dive in that anyone who does any sort of complex fiat finance related function, I'm sure you have the skill set and are the type of person that could thrive in digital assets. They're really no difference. There are challenges, don't get me wrong. There are quirks, there are things you need to learn, but you're probably doing as equally of challenging things and as nuanced and as specific to your finance function right now. And then the last thing I like to say is you are not late to the party if you're getting into digital assets now. It is still very early in the whole evolution of this and this technology. And so don't feel like you are behind the times. You are right on time if you start today.
Very cool. Those are some great messages. I think that's the final wrap up here seems to be that don't do things in spreadsheets that you're not meant to do.
Yeah.
And I think with that, we can close out. Thank you so much for doing this interview with us.
Thank you. It was fun.
Thank you for sharing all those insights. I also, that was awesome.
Oh, good.
Appreciate it.
Of course.